Good evening, everybody, and glad to have you here. What is today? Today is November 18th, 2014. Uh, Welcome to the Hit and Run Candlestick member e-learning this evening. We'll try to fill up an hour, maybe a touch more than an hour, and see what we come up with. Tonight's topic, though, I would like to dedicate it to the T-line. I've had quite a few people ask about the T-line, emailing and PMs, and we need to talk about it. Um, Besides, it's a good thing. One of the things I'm working on is multiple ways to trade the T-line, and that's something we'll be sharing here in the near future. So tonight would be a good night just to get started in that and going over a few examples. I doubt we'll get through everything this evening, just because I tend to be long-winded sometimes. But we'll certainly make a dent in it, and I'll try to answer as many questions as possible. Really quick, just a little bit on the market. If somewhere maybe toward the end, if we want to look at the market, we can. But right now, you know, the only thing you can say are the bulls in charge. The bulls are in charge, and um, I know I've heard from several people, even myself. You have to wonder, well, when are the bulls going to give it up and give the bears a chance and knock things down or correct? Well, I'll tell you, it will happen. Someday it will happen, but we'll get warned when that happens. We really will. If you come back and look at this correction here, we were warned here. There are no warning signs here. Now, we're coming up to this trend line. Is that a warning sign? The trend line might be a very minor warning sign, but the proof will be in price action. So I would watch that price action, and if it starts to fail up there, we will get warned. I know everybody remembers, the flash crash, and fearful of that, but that happened once in a lifetime. The Can it happen again? Sure, it could, but I don't think I would base my entire trading or my fear on that. Again, I think we will get warned. Now, IWM is a little bit of a lagger here. I wouldn't say it's horrible. I've been wanting IWM to pull back to about this area right in here. I think that would give a awfully good um, buying situation. I think it would be very strategic for the bulls to allow a little bit of a pullback, because I think that would add some fuel for really taking us up and out of here on IWM. But nowhere is it written that the SPY or the Dow or the Qs has to have the Russell go with it. So as long as I tend to follow the SPY S&P 500 as my number one chart to follow, so I'm going to go with that, and that certainly is uh, working. So I'm going to stay with that. All right, let's talk a little bit about the T line here. And again, don't be afraid to ask questions. Please ask questions. I absolutely urge you to ask questions, because usually what will happen is it'll lead into something that is very good. Usually the questions are excellent and really is helpful. The first thing I want to start with is, doesn't matter what chart pattern you're using, and it doesn't matter if you are using or you're not using the almighty T line. And I happen to think the T line is about the greatest thing since sliced bread. Saved my bacon, to be honest, and we'll talk a little bit about that as we go. But not all charts work out, and it doesn't matter what indicator we're using. It doesn't matter what we think or how we feel. It does not matter. Not all charts work out, and we've got to accept that. Another thing that is very important, it doesn't matter what chart pattern you're using. It is an absolute must that you use stops. Stops are very, very, very important. And I know a lot of folks they 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 don't use stops, and if they have a mechanism to protect them, that's fine. But when I hear people say, "Well, I don't use a stop because I don't want to get stopped out for I don't know, 25, 50 bucks, 75 bucks, 100 bucks," all depends on your position size, then I have to really think about that, because that is truly a wrong answer. Um, it's a cost of doing business. Just like a brick and mortar business, you walk inside your door in the morning, you turn your key, you walk inside, you flip the lights on, your electricity bill is already working. A stop is nothing more than an electricity bill. Think of it that way. It's a cost of doing business. So uh, you really have to accept those losses. They're far less painful than what comes after. Um, Another thing too is you're going to see me use the T-line tonight. I'm going to talk about the 2 EMA along with it. In fact, most of the charts we look at will just have 2 moving average on is that 2 moving averages on it tonight. And it will be the 2 EMA and the 8 EMA. 8 EMA, of course, is the T-line. Um, you know, the, you have to fit it to your trading style. You can make adjustments. There is absolutely no magic to use in the 2 exponential moving average. Absolutely no magic at all. In fact, here, let's just get over there. There we go. There is just no magic to it whatsoever. And the truth be told, there's not a great deal of magic in using the T-line, the 8 exponential moving average. What's magic is how consistent you use it. That's what makes it magic. In fact, that's what makes all indicators magic, is the consistency that you use those indicators. So, uh, fit it to your trading style. Um, if you're going, we're going to stick with the T line, but maybe the 2 EMA is too fast. There's nothing wrong with that. Put the 3 up there if you want. You can put the 5 up there if you want. I do think you should have 2 moving averages. I think one should be faster than the other. Um, but definitely fit it towards your trading style, and I think you'll come out ahead right there. So let's start off, and you know what? I'm going to start off. Gigi up there, Goofy Golfa, posted a couple of charts a little bit ago. I'm going to start with one of those, AG, because AG is a pinball setup, what we call a pinball setup, and that is actually how the T-line became in existence, is this chart pattern right here. Now I'm going to really quick run over so you can see what a pinball setup is. It's just this chart basically in a downtrend. We want the 20 below the 34, 34 below the 50, and I prefer the 50 below the 200. The whole idea is we're getting a little bounce. It may be a dead cat bounce, but it's a bounce. And what we're looking for is a minimum of 10% between the T-line and the 34 exponential moving average. I'm being a little quick here because this is not a night for the pinball setup. I'm just trying to get to how the pinball or how the T-line came about. So years and years ago, the way I would trade was simply off the bottom here, using a oversold or overbought indicator. And when the indicator was oversold, look for those candlestick signals, buy those candlestick signals. But I found that it just didn't work out. Now, it doesn't mean that's a bad setup. It just didn't work out for me. It was just not my bag of tea. Unfortunately, it took an awfully long time for me to figure that out, and it took quite the education as well. So what I had to do was figure out how to, and that's all I knew. That's all the trading the only way I knew. So I had to figure out how to make it work because I knew of no other way. Well, what I did after looking through a whole lot of charts, I realized that, hey, if if this started moving up, it would go to that 34 exponential moving average, a um, higher than normal amount of times, and it would pull back from there. So I figured out that if I traded the candlestick chart from here to the 34, I could pull in 10, 15, 20%. Okay. The problem, it wasn't consistent enough. And what I found was too many times the stock would maybe throw us a bullish engulf here, just like this chart. And I had no rhyme or reason to where to get out of it necessarily. And oh, sure, everybody can say, well, put your stop right here. Well, sometimes that's easier than done. And I think most traders recognize that. Uh, we learn that over time, um, but it does take time to learn that. And I think most traders would agree with that. So what I had to do is figure out, well, what is strength? What is follow through? And follow through does not, I learned early on that follow through does not have to be positive trading above this bullish engulf. That's not what, um, that's not, well, that certainly is a way to trade. You can do that. I would agree with that. You could make that your reason, or how you might trade, your strategy. Uh, but I learned early on that bullish or candlestick reversal signals, they can they can start that reversing process, but it might be 3 or 4 days later before it actually starts reversing up. And what I found too was, and this is, I used to have just hundreds, well, maybe not hundreds. That's an exaggeration. I had an awful lot of moving averages and indicators on my chart at one time. And I started eliminating indicators that didn't make sense, that didn't show that had anything to do with the chart. I would eliminate them. Well, one indicator kept hanging around, and that was the 8 exponential moving average. And what I found was, if we had a bullish candle move up above the 8 exponential moving average, and then as long as price hung out above that for ever how many days, it doesn't matter how many days, as long as it hung out above that without closing below, then it tend to work out a little more often. In other words, the price from here up to that 34 EMA tend to work out a few more times than normal. Well, and that would be true even if we had a close above the 50, and then let's say we close below the 50. Heck, let's even put it a couple of days below the 50. And I'm sorry, the T line. And then all of a sudden, maybe we close back above the T line. Well, then it would start that process again. So you could be long, you'd be out, you could be back long, uh, looking for this thing to move up to that 34 EMA. What I found was, again, we would get over the T line, and it was like trading changed at that point. And more charts started working out to the upside when they hung out over that T line area. So I started using it, and um, back then it was, we just call it the 8 exponential moving average. And one time we just said, man, that's getting hard to say. You say 8 exponential moving average, 100 times a day, and and you, your tongue gets a little tired. So we started to rename it, and we came up with T line because the T line, it was a trigger line. It was a trend line. We used it both for trigger line and a trend line. So, and that's actually what it was called. We kind of bounced between trigger and trend line for a little bit of time, and then we shorten that up to T-line. So that's how the T-line got its name. And it was all because of this chart pattern right here, the pinball setup. Linda's asking, uh, can you explain who or what made uh, the T-line moving average so strong? Well, I don't know that there's a who. I don't think there's a who that made it strong. I think what makes it strong is it tends to follow price action, and price action is king. Price action rules over everything, not by a little bit, by a monster amount. There's no indicator that comes close to telling you what price is going to do compared to price action itself. And the T line, what it now, another thing, I want to stop here for a second. I use the T line, the high plus the low plus the close divided by 3. Okay, that's how I arrive at it. You can use the last price, and it's not going to make any bit of difference. It's just not going to make enough to make any difference at all. So if you're looking at your chart and you're looking at mine and you're thinking, why don't they line up exactly? That could be why right there. But I use high plus low plus close divided by 3. So um, again, when a chart is moving down, it tends to tag the tops of those candlesticks. Now think about candlesticks. They they require confirmation. So if this chart is moving down and it can't get bullish confirmation, for instance, right here, we have a bullish Hiromi here. Hey, let's get long. Well, hold on here. We need confirmation. What would confirmation do? It would close it up over that T line or awfully darn close to it. So if you're looking at this chart and you can see how it just runs up against that T line, what's really happening? It's not having candlestick or price follow through. That's really what's happening. It's not the T line so much. Its price action is not allowing those 2 days high, those 2 day highs that follow through that we need in price action. And the same when we start turning up, all of a sudden the T line gets underneath, and the reason it stays bullish is not because of the T line, it's because of price action. And price action starts moving higher and higher, and the T line starts following it up, kind of carving out those lows, just like it's carving out these highs right here. So what the T line is, it's a guideline. It's a terrific guideline. Um, and um, so when you're trading it, one thing I like to always ask myself, and I always tell students, is ask yourself, what is price doing in relation to that guideline? Or what is price doing in relation to the T line? And once you answer that question, it really becomes very helpful on what the trend is doing. What is price doing in relation? What is price doing in relationship to the T line? It's trading below. If it's trading below, it's bearish. What is price doing in relationship to the T line right here? It's now trading up. So it now becomes bullish. Now that bullishness, we certainly don't have a big trend started here. I would argue that, yeah, we have a bottom forming, but we really don't have any really big follow through here, and really nothing to grab a hold of as far as a trend goes, except if we were to look at those two moving averages. We now have a trend, don't we? The faster moving average is over the slower moving average. Price action is also trading at new highs compared to what it's been trading. So all of a sudden, we now have a trend to work with. So now you see why it's not important that you use the 2 exponential moving average. You can certainly use whatever moving average you want. What you're doing is you're comparing it to the T-line and telling you, are we in a bullish trend or bearish trend? Now, when I say bullish trend or bearish trend, I'm comparing that to your trading style, not this chart is bullish or this chart is bearish. What I'm comparing to is a trading style, a swing trader, for instance. This becomes a swing trade because the chart is starting to swing bullish. Um, I don't use this terminology much anymore. I'll try to get back into doing that. But when the 2 EMA crosses up through the T line, that's called a swing low buy signal. When the 2 crosses down through the T line, that's called a swing high sell signal. So if we have a swing low buy signal, our trend is starting to move up, and we want to trade that as long as our trend stays intact. The fast moving average over the slow moving average. I have a couple questions here I better answer really quick. Don is asking, have you always used the high plus low plus close? No. TC at the time I'm using TC 2000, and at the time the TC product didn't have that, and I just used the last price. Charles is asking why. Because the high minus the low high plus the low plus the close divided by 3 gives more of an average price, in my opinion. And I'm looking for an average. The T-line is not, I don't use it so much as an absolute. I use it as an average, as a guideline. There's nothing wrong with using it as an absolute, meaning, hey, if this chart closes below the T-line, you're out. In fact, the pinball setup is designed that way. The pinball setup is designed that if this chart was to turn around tomorrow and close below the T-line, you have to close that position out because that strategy is set up that way. But for the most part, I use it as a guideline. I try not to let it get too far out of hand. I certainly don't chase the T-line during the day for stops. If it wants to come down here during the day, it's okay. Let's see what it does at the end of the day. That's what counts. So many times I'll let the chart come back intraday and allow it to work itself out of it toward the end of the day. I see Bob is saying the T-line is acting as price shadow. Yeah, that's a good way to put it. Thank you. I'm going to use that. MS, how do you use the T-line on a sideways market? Well, here's the thing about, and that's a great question, by the way. Here's the thing about sideways markets. Don't be in them. T-line or no T-line, I think sideways markets are they are a setup to lose money is what they are. There are more people that has trouble trading sideways markets than you can imagine. In fact, I know more people that make money in a bullish market, and then the market starts to move sideways. The market starts to move sideways, and all of a sudden they give back all their money that they just made. And the reason is a sideways market is very hard to trade. A bullish market, a decisive bullish market, is very easy to trade. A decisive bearish market is very easy to trade. A sideways undecisive market is very, very tough. So I'm going to have to go with my answer. Don't trade a sideways market. Sit back. It won't stay sideways forever. Go fishing, wash your car, do whatever you do. Just sit back and try not to get too involved in a sideways market. Now, as far as how would you trade it, just simply follow the chart. You know, this whole couple of weeks, I've been talking about the SPY on. We're moving sideways. You know, the bulls are definitely still in control, but I've been expecting a pullback to this area here, which is about 23.6% retracement fib line pulling back, and it never has. So as sideways as we got right here, we never once got bearish, not one time. Now IWM, little different story. We got a little bearish right here. In fact, we're still under the T line. Let's go take a look at the line chart. According to the line chart, if 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 you want to stay constant, and if you want to, and if you use IWM as your leader. Now I don't use that as my leader. My leader is the SPY. I have been following IWM a great deal more lately, and members probably have noticed that. If you followed IWM and that was your main chart, indice chart you looked at, and if you followed, well, what is the T line, or what is the 2 EMA doing in relationship to the T line, you would have to say right now it's bearish. It's a bearish swing trade at this point. Now I'm not saying the IWM is bearish. I'm just saying it is now on a pullback move. So a bearish move comparing those two moving averages, because the T line is leading, I'm sorry, the 2 EMA is leading the T line down. Price is also still closing below the T line. It's closed below the T line for 2 days now, yesterday and today. So that right there says we have a bearish swing trade. And we don't, let's for a second here, and this is a good chart to look at. Let's forget for a moment it's the IWM. It could be any chart. A chart is a chart is a chart. I get asked this. I bet I get asked this 1,000 times a year. I might say, hey, this is a buy down here. Somebody says, well, I thought you were supposed to only buy above the T line. Not true. If there's any rumor I could change, I'd like to change that rumor. You do not have to wait to buy above the T line. In fact, my favorite place to buy is down here and then have it close above the T line, because when it closes above the T line, what's it really doing? It's showing bullish strength. In this case, it would be showing a reversal, wouldn't it? And what happens when we see reversals? Everybody trips over themselves to get into that chart. Well, if you're already in, if you're already in down here and then it starts climbing over the T line, everybody that's tripping over themselves buying it, all they're doing is pushing your price up, and that makes you happy. So you don't have to wait for over the T line. But what I do think you need, a reason. You just can't arbitrarily buy it. That's where candlestick signals come in. Here we're having a little bit of a downtrend here. We have a doji right in here. So what are we going to do? We have a doji, right? Indecision. We're going to be bullish tomorrow on any positive trading. The second we might see positive trading, I want to be bullish on this. I might buy this chart. Let's see here. I'm going to go to a chart here, and a completely different chart, and maybe explain this here. This is a trade taken today. And I want to come over here and show it real quick with the full moving averages. This is a pinball setup as of the close today. Pinball setup says that we are looking for approximately 18.8% move on this chart. That's what I'm looking for. I bought it early today. I bought it up here. It pulled back. And when I bought it, I explained to everybody in the room, two things have to happen in this chart. One, it has to close over the T line today, or I won't stay in it. Because if it closes below the T line, it's still in a downtrend, isn't it? And we can come over here and we can draw trend lines. We can draw trend lines all day long. Where do you want to put them? Come down in that top right there. Let's see here. Make sure I do this right. There we go. Um, come down to this top right here, here, where exactly you want to put it. The T line acts as a moving trend line, and by closing over that, here we've gapped down, and then for what, about 15 days or so, we've traded below the T line. Now we're trading above the T line. There's a big character change in this chart. So um, that's where I'm looking for that reversal, that change in character. The Bulls no longer want it to go down, or maybe the Bears are just tired of it going down. Who knows? And now it's starting to change directions, and I want to be part of that. And we're breaking out over this trend line. And since the T line follows price so close, top and bottom, it acts very well as a trend line. Oh, okay. I'm sorry. I kind of got digressed there a little bit. Two things had to happen. One, it had to close over the T line today to stay in it, and tomorrow it must close over the T line. Now, I don't care where it opens. I really don't care at all. In fact, if it opened down here, say at 1450, I would probably add to it with the idea that at the end of the day, it must close over the T line. And what that would do would give us a pinball confirmation right there. All it's got to do is close over the T line. Our confirmation is not the candlestick, it's the T line. And from there, then we'll look to take it up to that 34. Well, we'll look to take it up. The market will look to take it up. We'll look to take some profits. Um, let's see. Is the 2 also the high? Yes, it is. Everything. The 2 and the 8 is the is high plus low plus close divided by 3. Yep. Um, that's actually good advice. Go. Yeah. Sometimes you're better off to go fishing. Yeah. Let's see. Wakas, his market tracking symbols are. What do you do when they're all three different? I'll bet that's confusing. I think people hear Bigelow say that a lot, not that he's saying it's a requirement. Okay. Do you actually buy the stock or an option? Stock. I do not do options. When do you decide to close below the T line? Oh, 15, 20 minutes before the close, Charles. Look, you can you say it gets into what 3:30 3:30 in the after 3:30 in the afternoon. You know what that chart's going to do by then. And let's see. For clarity, Bigelow attributes his trading style. Yeah, yeah, I've heard him say that. And see, Bigelow will not buy below his closing 8 EMA T line. Bigelow thus infers almost, claims Rick trading rules are the same. They are not. For starters, Rick's T line. Okay. Yeah. All right. Thanks, Don. And let's go look at a few other charts here. I've got kind of lined up to look at. If I can find them. Here we go. And what I want to do is let's just stay with this chart here, because if we look at another chart with other moving averages or indicators, it really starts confusing what we're looking for here. Um, and what we're really trying to work with is just the T line, so I think it's best to leave everything else out. Now, I think it is very I think it is very important that you consider stocks coming off of support, or maybe going up to resistance, or a major moving average, things like that. But I think those things are important. Um, but the two main criterias will be your candlestick patterns, your candlestick signals, working with the T line, and what that's doing, it's showing those candlestick signals and or patterns. It's showing the bullish follow through that they may have, and that's what we're looking for. If you take MIT, by the way, all the charts we're going to look at right now are charts that have been on our members watch list over the past several weeks. These aren't cherry pick charts. These are charts just flat from the watch list. I have picked them to show tonight because we just can't look at all of them. We do have a time issue. So MITK is one, and you can see how we're trading below the T line down here, and you can see how it made a big change in character, a big bullish candle. We've even got some, I'll call them hammer wannabes. I call these hammer wannabes because they're not really hammers, but they certainly have the handles that a hammer would have, or the tail. And what that's telling me are buyers are starting to step in. We have this big bullish candle, um, and look how this thing just worked. And it pulled back, and look how it came back up. What a great day to be buying it right here. We're right at that T-line area. We closed just right back above the T-line. And if you notice the 2 EMA, it didn't come crashing below the T-line. It came down and it kissed it pretty good. And I guess maybe if we blew it up, we could actually see where the 2 came actually maybe down slightly below the T-line. But the candlestick, this buy or reversal signal here, brought it back up. This would be the buy. I was asked today to also talk about the stops. In a case like this, the stop would have to be the lowest low you see right in here, which it would be this candle right in there. Once we move over the T-line, then you might move to a close below the T-line. But in this case, we would have to go here. Or even during the day, if you bought this, you'd have to set a rule in your plan that says this must close above the T-line. Because if it doesn't, and if it closes below the T-line, you have 2 closes below the T-line, that's really starting to work with a little bit of a downtrend. Or we should probably call that a little bit of a pullback. And that pullback might lead deeper than what you really want. And then you can see how it gapped up, and you would have made some money here. Nothing here would have told us that it's going to gap up. There's nothing here at all that would have said that. So I don't want anyone to think that. But you can see how if you look at the 2 EMA and the T-line, or a moving average, a slower moving or a faster moving average compared to a slower moving average, you can see how that trend continues to hold its place. And you can see how many places you might have been able to buy this. You could have bought this all the way into this area here. You could have bought this on this pullback here. You could have bought it and sold it. I mean, what would we have done here? 22%. Don't let 3 or 4 candles or a little bitty space fool you. 22%. It doesn't need to go any higher. Most people, I would venture to say that the majority of traders, they would just be tickled pink over 22%. And then you can see how it just continues up. Let's see. I want to look at one thing here. Something else you want to look at if you're going to use other moving averages. And by the way, this is the chart I look at all day long right here. I stare at this chart the majority of the day. This is what I showed everybody. Anytime you have price moving up over major moving averages, pulling the T-line, and a T-line crosses a major moving average, you'll find that that will be very beneficial. You'll find that that would be something you might want to look for because it really starts to help confirm that trend in there. Another chart is this one right here. Look how we had a bullish engulf that held over the T-line, and the next day price stayed over the T-line. That's the important thing. Not so much to me that it's a doji, although if we were going to talk about that chart pattern, we would talk about it. But tonight we're talking about the T-line, so what we want is price the second day to confirm over the T-line. From there, we can start trading. If you didn't buy it here and you're looking at that T-line trade up, in this case it ran up pretty good, I would hope that 45% later you would have taken profits on this. Here's another chart. set this up. There we go. Price moving down. You can see what the T line is, I'm sorry, the 2 EMA is doing in relationship to the T line. You can see what price is doing in relationship to the T line. You can see how it starts moving sideways. Price starts moving sideways, and then it pops up. So if you want to go back, go back to this candle right here, because this is the reversal candle. Now, I know that goes against what everybody has learned. Everybody's looking for bullish candles to show reversal patterns. This starts the reversal. This starts the construction of that bottom. Notice how this candle's down. We get a little bit of a handle on it down here, showing the bulls brought it up. All these candles here are trading sideways inside day. So when that starts happening, this is where I really want to start pay attention to these charts, maybe even buy them underneath the T-line with anticipation that we're going to break out. I know where my stop's going to be. It's going to be right there. Now, there's also nothing wrong with putting this on a watch list and just simply waiting till you get that breakout. There's nothing wrong with that. Put it on a watch list, wait for the breakout, and then trade either this breakout, maybe a small position, and then the next day go into it with the rest of your position, assuming it closes over the T-line. If it closes over the T-line, that's a sign of strength. That's a sign that the T-line is going to support, and price, then we would be looking for price to move up for 3 or 4 more bars, maybe 3 or 4 more bars, and then move sideways and then up for 3 or 4 more bars. As long as we hold the T-line without getting too far away from it, we want to hang with that and stay with it. Let's see. I think I missed a couple here. Don, for the first time tonight, I now understand why Rick sees the EMA or seeks an EMA of the high plus low plus close divided by 3. Mid price makes more sense. Yeah, it's just more of a, it's more of an average, and I think that fits it best. There was, let's see, Gigi's saying there was something that told you it was going to gap up. Earnings the next day. Bruce, the T-line shows well on 90-day PAYC thinly traded. Where is it today? Well, let's go look. PAYC. Here's PAYC. I'm not really sure where the question is here. T-line shows well in the 90-day PAYC thinly traded. Where is it today? Well, it's at 24.84 today. You can see how it started moving up, and I've got no idea what what a chart with other moving averages on it looks like. You can see where it started moving up and it moved back. So if you were long, you want to be out. If you're trading the T-line, you might be out to protect your profits. Once you see these dojis are starting to set up, you might want to start buying it back. You'd be long, you'd be out, like I say, if you're trading the T-line. But if you're looking at other things in the chart, other moving averages or support and resistance, you might stay in for these little pullbacks here. You probably wouldn't want to stay in on this pullback. That's why if you follow the rules, then you'd be out on that candle right there. But it looks like, from here it just started moving up and continued to move up. See, Bruce is saying that he trades it. He trades the T-line. Is it getting too far away from the T-line? I don't know that it's getting too far away from the T-line just yet. You're about 8% away. I usually use 10% as sort of a guideline, although I don't stick to that. But what you might see is a little bit of consolidation, and that's I mean, that's exactly what you saw right there, and it didn't turn out bad. Um, you can see that that consolidation stayed with it and then moved up. So you might see the same thing and then continue to trade upward. So here's where I would just use your stop, keep moving your stop up a little bit to protect it, and watch for that sell signal. Other than that, I would stay with the chart based on this. There's no sell signal up there at this point, and I don't think it's drastically far away from the T line. Let's take a look at another one. Here's today's featured trade idea. Today's featured trade idea was EXK, closed up 10.10% today. And it is a pinball setup. We are looking for the 34 exponential. I think around that $3.50 mark. I think that's where it is right here. And you can see how we have a swing low buy signal. We have a bullish engulf with follow through. And the swing low buy signal sets us up now in a short-term trend. So if this price started to move back, say an inside day, there's a tremendous amount of people would just, I'll be honest, freak out over that right there. And as long as it stays in that trend, there's the trend right there. As long as it stays in that trend, it's still very tradable. That would not worry me, would not concern me, and the reason is it's still in the trend. It's still above the T line. And some may follow something we call a trap. We usually use the 20 and the 50. We call it a trap setup. Well, this is very similar. Price trapping between the 2 EMA and the T line. As long as the 2 EMA is still leading the T line without a confirmed sell signal, that trend there, as short as it may be, it is still bullish. So that's one way to use the T line to help you stay in a chart, maybe. Let's see here. CH has a question. So if a person decided price closing above the T line is a firm requirement as a buy signal, is his or her strategy, would you still agree with that? Absolutely. I'm going to read that again just to make sure. If a person decided price closing above the T line is a firm requirement as a buy signal, I would absolutely agree with that. I think that is a positive thing, absolutely positive. And another, I think this is the chart. Yeah, we can use this chart. Something I want to do here is I'm going to delete the 50. I don't want to distort this chart with that. And we'll delete the 34. I don't want it to be distorted on here. See how this chart, ZLTQ, it's up and it moves back. Oh, and by the way, a quick thing here. When I'm looking at charts, when I see a chart moving up like this, I'm constantly looking for sell signals and I'm concerned and worried. When a chart moves back, I'm constantly looking for bullish signals and I'm excited. It's completely opposite of what most people do. Most people, they see this trend, they're just dying to get in it. I'm dying to get out of it because I'm making money. When it's moving down, I'm dying to get in it when everyone else is hurting or dying to get out of it because they can't stand the heat. Me, I'm killing myself to get in it. So as we start moving down here, here's a little trick right here that should give you a tad more confidence. When you see a close from below the T line to above the T line, and I'm going to use this one. It's not exactly perfect, but I'm going to use it because it did open up below the T line. But see how it closed above the 20-day simple moving average? When you can engulf a major moving average along with just what you were talking about there, CH, a close above the T line. Would I consider that as um, requirement for my trade if I understood your question right? And again, I would agree to that. But anytime you can add a major moving average like the 20-day simple or the 50-day simple for that matter, um, I think that adds a great deal more credibility to this trend um, actually following through. So that's one of the things to look for. Anytime you can engulf two moving averages, one being the T line and one being another moving average. And the 20 is very common, by the way. I have several scans I use looking for a close, say below the T line, and then I want to be alerted when it goes above the T line and the 20-day simple moving average. I think that is a very strong chart setup right there. Let's see, could you go over a swing low buy signal? Sure. Norm, it's the easiest thing in the world. It's simply the 2 EMA compared to the T line. And when it crosses above, that is a swing low buy signal. In fact, let's just take away candlesticks. It's got nothing to do with it. Doesn't have anything at all to do with a swing low buy signal. Right there. You know, just by looking at this chart here, let's straighten a few things out. Let's run the T line here up. Probably could do a little better job than that. I'm going to start right here because that's where it really starts to move up. And then let's take the 2 EMA and we have these highs. So I'm going to come back here because I want to grab those highs. It's pretty close. So if you had a chart and if you had candlesticks on here, how do you think they would act in that trend right there? They would act like this. I mean, they wouldn't be that perfect. We know that. But that's exactly what they're doing. You know, they may not come all the way to that low line. They may not go all the way to that high line, but that's exactly what this chart is doing from a candlestick point of view. So anytime you can get these moving averages to change from a downtrend to an uptrend, that's what I'm looking at. Trade that trend. As narrow as it may be, it's still a trend. As fast as the 2 EMA might be, it's still a trend when a fast moving average leads a slower moving average, the T line. So that's where let's see here. There we go. Let's do this. So we start moving up. It gets, obviously, bullishness takes it up. But see that little dip? Well, you had to have some bearishness in there. So we probably had a candle that looks similar to that. It moved up, and you see it pulled back again there. It pulled back here. So, yeah, we probably had a couple bearish candles in there. But those are all, you know, you hear a lot of people say, buy the dip. What a great chart. What great chart and great two moving averages to use to say buy the dip. As we're trending up, buy those dips, watch them pop up. Buy those dips, watch them pop up. Of course, you need candlestick or price action to bring them up. Let me see here. Let's bring our candlesticks back on board. There we go. So Norm, I'm sorry. You know, I may have got kind of carried away there. Basically, a swing low buy signal is when the 2 crosses up over the T line. You want a mechanical trading system? Here's a mechanical trading system for you. And we'll just use this chart since we have it up. Let's see here. Let's start right here. And let's get green. So we're up over the T line, so we're going to be green. Our 2 EMA came below the T line, so we're going to sell and maybe go short. So we'll just put a little line. That's pretty little. So now we move back up over the T line. We're going to go green right here, and that would have taken us up. We're still above the T line, so we're actually still green. Now, we're traders, so we know better, okay? I mean, it pops up. What are you going to do? Gaps are gift. You're going to take your money. But for the purposes of showing this chart, you're going to stay in it. Now, the T line did close below, I'm sorry, the two did close below the T line. So we'll have to go ahead and be short or be out. And then it came right back up, so we're going to buy it back. It never went below the T line, so we'd be long that entire time. We're long, we're long. Right there, we're short or out. And we're going to short it. And you can see we came back green, so we're going to go long. We're going to stay with it. We're going to stay with it. We're going to stay with it. The 2 EMA never went below the T line. So we're going to stay with it. And it's still looking bullish. Excuse me. So you want a mechanical trading system? You want a black box that tells you when to buy and when to get out? There you go, right there. When price crosses above the T line, you're long. The minute it crosses below the T line, you're out. If it crosses up, you're long. You're out. You're long. You're out. You're long. You can see by this chart, I didn't make this up. I didn't make this up at all. That we were on this chart. We can do this to any chart you want to do it to. It does not matter which chart you do it to. You draw this on there, you can see exactly where to be long. Now, by following this, obviously you're not going to catch these highs. But once again, we're traders. We know better. Gaps are gifts, so take it. Don't write it back down. Take it, let it come back, and then buy that next swing. We move up. You know, think about it. Geez, from here to here, what is this? I don't know. That's a percent. Probably 90% of traders don't make that kind of percent, but a few times a year. Take it. Let it pull back. If you don't short or you're just a bull trader, wait, don't do anything. Get back in it. Look at the run you could have made. So, I mean, like I said, a black box. Buy, sell based on what price is doing with the T line. No complication there. Pretty darn simple. And it would work. All right, let's see. Don is asking CH. Oh, you're replying to CH. I asked it because it can help some people like me trade with better consistency and more confidence. CH, that's exactly where I was and what I needed, and that's how the T-line came to be. I had to have it because it was a guideline. I used to explain it like going bowling and putting those blow up things in the gutter, so you know your ball has to go down and at least go down the middle. That's what the T line is. It keeps you within the guidelines of the trade. That's what I found it anyway. And Andy, yes, I'm an end of the day T line trader. Now, you know, we want to use a little common sense there. You know, if the market is tanking and you're in a stock, you're in a stock and it just starts doing this, you know, don't sit there and say, okay, I hope it's going to come back up, because it's not. But all in all, it's the end of the day close. Yes. You can certainly use intraday. There's no rule says you can't. You just might get chipped out of there a little too many times. But then again, it might save you from a little larger loss too. So I think on that one, it might be best to consider your style of trading and see what works best for you there. Charles is asking, does the weekly show a clearer moving average trend picture than the daily? Probably does, but and that's something that you can certainly use the T line on the weekly chart. In fact, you can use it on any chart you desire. 1 minute doesn't matter; it still works. You just have to adapt it to your trading style. And Charles, I know that if you follow the weekly, you can certainly use it that way. The same rules exactly would apply. Let's see, Ron B is asking, with regards to your suggestion of the T-line mechanical system, you could potentially improve it by only taking trades which are on the correct side. There you go. Now Ron's thinking. There you go. That's one of the things I was going to talk about. You can set this up so that you're only looking for those trades above, say, the 50-day moving average. I mentioned earlier, excuse me, I mentioned earlier that one of the things I look for is price engulfing multiple moving averages. We call that a squeeze play. And the squeeze play that probably most everyone knows is when we squeeze or engulf the big three, the 20, the 34 EMA, and the 50. Well, I also look for charts, and I mentioned this earlier, where charts are below the 20-day simple moving average and below the T line. Well, that's not all right. Let me correct that. Charts where price is above the 20 but maybe below the T line. And when it's alerted only when price is above the T line and the 20. And many times it crosses both at the same time. Those are charts usually in very nice trends, what I would call a healthy trend anyway, that have maybe dipped a little bit low below the T line and maybe, but not always, below the 20. And when they come back above the T line, then it's like getting that trend going again above that 20-day simple moving average. But that's one of the, I've got several on the scanner, several scans set up that where I want to be alerted when it crosses above, or when it closes above the T line and above the 50-day simple and above the 20-day simple. That's a scan that I use quite often. Let's see, Don, CH, if you adopt, again, you're talking CH, okay. So let's see here. I've got a few other charts let's take a look at. B. B was one recently on our featured trade idea list. You can see how B started to move up here. This, for the most part, this is down, but also quite choppy. I mean, you can see where it's down, but quite choppy, almost down and sideways. Then all of a sudden, what changed right here? Big old bullish engulf. We popped up, we popped down. Great trading right in this area. That pullback would have been a terrific place to start buying, even this low right in here, because we are still above the T line. Confirming, rallying up, shooting star. It deserves a pullback after a shooting star. So it pulled back, and now look what it's doing. Up, and we're still moving up, looking like we're going to attack that shooting star. There, Apple. Let's take a look at Apple. That's always a good one to look at. Somebody asked about what do you do in sideways markets. Look at that Apple sideways. How are you going to trade that? How are you going to trade? You're not. So when a chart starts moving sideways, you just want to step out of it. Well, we move down. Here we start moving up with a little bit of vengeance right here. We can come over here, and once we break out of these tops, start looking at that trade right there. One of the things I like to do is I'm going to pull up a kind of a test here. Let's see, that's not the one. I made another one. Of course, you think I could find it, and for lieu of time, I'll just stay with this one. Members, you can find this on the website. This is on the website, and it's a test. All it is a test. Take kite here. In the past 35 days, How could you have traded that T-line to profits? This is not a scan to find charts that are working. That's not what this is for. What this is for, to go back and load that scan up and then look at those charts. Now tell me where you would have traded that. Tell me how you could have made, well, don't tell me, tell yourself how you would have traded that. JNS, how could you have traded that? And, because of the gap and sideways, I hope the answer would have been, well, not really. And, let's look at another one. How could you have traded that? I mean, it's obviously in a trend. How many times could you have traded it and made money on it? So, go back and just take the test and start looking at those. And when you find them, you go through this. Take a few minutes in the evening and just say, you know what? I can see how, man, I might have taken a little bit of this hammer because, man, that was a nice gap up. The pullback stayed within the gap. In fact, it pulled right back down to support. You know what? I'm going to take a partial trade on this hammer on anticipation that either today, hammer day, or the next day, it has to close over the T line. Boom, closes over the T line. Maybe you added to that position. It rallies up. It gets up here. This is not a big mover, obviously, but 4%, maybe you took your money, maybe you didn't. But just watch what happens here. And here's one of my favorite charts, Sonic. How could you have traded Sonic? Could have traded Sonic long right here. Let's go take a look at this chart right there. Here we can draw a trend line. You've got a high, a lower high, matches up. All of a sudden, we break out over the T line. That trend, we break out. The 2 EMA, we start swinging the 2 up. So we have a swing low buy signal. Man, you're still in it. You're still in it. You're still in it. I hate to tell you, you're still in it here. I know it probably would have scared the britches off of you, but you're still in it. You're still in it. You're still in it. You're still in it. You might be closing it out right now. So let's just take it from right here up, and we'll take it to, we'll be fair, right there. There's a 14% trade still in it here. So, once again, just go to the website, get this scan if you have TC2000. If you don't, maybe you can figure it out for whatever program you use. All it is a stock that's been trending up for 35 days. No trick to it at all. Just simply trending up for 35 days. You can make it longer if you want. And then go back and study and see where could you have bought and made money. Anyway, a great lesson for that right there. XON. Look how that moved up over the T line. I think it's important to pay attention to those candlestick signals and patterns. I think you have a candlestick pattern right here. We're in a downtrend. We move way down. See how this is pretty much flat? And then we move way down, and the bulls bring it right back up. We've got a handle on that candle. Yeah, that might be a hammer there. Maybe. No. Nah, that's not a hammer. But it's a hammer wannabe. You can see our little 2-bar pullback here held that hammer low. That's time to start shopping. Keep that on your watch list. All of a sudden it pops up, or maybe you don't have the means to find those like that. That's not a problem. It pops up. You have the means to find this. Well, now look back and you can see, that's looking pretty good, like for a reversal situation. Now we're up over the T line. The next day becomes a buy on what I like to buy, an inside day in this case, it would have to close over the T line, and it's so tight up there. I don't know whether you'd actually catch that or not, depending how long it took to move up. But what a great place to be buying. Inside day off this candle, above the T line. Let it do whatever it wants to do as long as it stays above the T line. Man, there's a nice little You know, if we got up into here, there's a 20 through 24 percenter could have been made on this run. And now it's trying to do it again. This was a featured trade idea back here, by the way. And now it's up here, kind of moving sideways, a nice um, little ascending triangle. Let's see here. Let's do it this way. Nice little ascending triangle there. Watch for that breakout. It could be a buy. Anywhere in here is still a buy above that T line. Okay, let me go check the questions out again. Wakas, here's my a feeling about options. First of all, I do not trade options. Second, if you can't trade a chart straight up, in other words, if you can't play poker head on, then I don't think you should be an option. So if you are a successful trader, um, and what I mean by that is winning more trades than losing trades, managing your losses, keeping them smaller than your gains, until you can do that straight up, a straight equity trade, I don't think anyone should be in options. Now, if you can trade successfully, you just want more leverage, then maybe take a look at the options. But you've got to be able to trade straight up first. Um, let's see. Let's see. Yeah, and by the way, there are some exceptionally good option traders in the room, and that would be more than willing to help you, I'm sure. Let's see. Norm is asking, can I take a look at EAP? Sure can. EAP. You know, I'm gonna come look at it. There we go. With this chart here. Whoops, I forgot. I don't have all my stuff up here. There we go. You know, I think EAP is a buy. Has anyone noticed anything? And I want to talk about this because EAP fits the bill. Has anyone noticed that charts that have pulled back look like they were going to get kind of nasty, and then they started back up, and they've come back up through the 20, back up through the 50. There's been a lot of charts do that, have led higher. This fits the bill right here for leading higher. So this, to me, it looks bullish right now. It's also, we've got a bullish W pattern right in there. I call this a trend reboot. A trend reboot. You can see how the trend is moving up, and let me draw that trend on there in case you can't see it. What I'm going to do is use that 50-day simple moving average like that, and then we'll come up here and we'll just grab those tops. You can see how we're doing what trends do. You know, that's what trends do, up, down, and now we're breaking down. So it breaks out of that trend. Bad news, not good for the bull. It comes down, it dances on the deuce down here, it moves up, it kind of dances a little bit, and now it's starting to get back into that trend. That trend is being rebooted. So once we're back into that trend, that's what I would look for to happen. Typical trend movement. Anything below the 50, you want to step aside or be short. Okay, so I was kind of hoping we'd look at more charts tonight. I tend to, like I said, I tend to get a little winded on these things. I do apologize for that. Bruce is asking about TZA. TZA, let's try that again. TZA is trying to put a bottom in. But remember what you're trading here. You're trading IWM. That's really what you're trading. You're trading, if you're long TZA, you're trading IWM moving down. So what I would do is I would keep an eyeball on that IWM. You want to watch that. That starts moving up over the T line. I'd probably leave TZA alone for a while. If we see continued trading below the T line on IWM, then I would consider trading TZA is what I would do. So you really need to watch IWM because that's really what you're trading when you're trading TZ. You're trading against it. So I would watch that right there. So I guess when it comes down to it, I don't know that I answered your question. Right now it's moving sideways. You can see I've been watching in here. I have it in a little channel. Long as it stays above the T line in that channel, it's very tradable. Anything below that, and I'd be a little concerned. And if it moves below that, it's because IWM is moving up, and you don't want to mess with the bulls. One thing about this market over the past year or so, not just a few days, the year or so, uh, do not get in a wrestling match with the bulls. These guys have been serious, and trying to guess where the tops are. Dangerous game. Trying to sit there and say, uh, well, geez, this market's got to come down sometime. I agree, it does, and it will. I promise you. It just might not come down when you think it should. So, I like to say, I wouldn't arm wrestle with the bulls here, not just yet. AFFX, AFFX. Nice little T-line run, by the way. I don't think I mentioned that one time tonight. Uh, T-line run. When we have price action moving over the T-line for multiple days, that's a T-line run. Great consolidation right here. Close below the T-line, now closing above the T-line. That becomes a buy to me. And I apologize. Somebody asked me to talk a little bit more about stocks tonight, and I haven't. I apologize. I think I mentioned it one time. So let's talk about that. When we're using the T line and we have a scenario like this, which happens many times, we move back, we put in a low, and then back up. Outside of using the T line, this has to be your stop. Uh, well, has to. I guess it doesn't have to be. That's what I'm going to look at because that is the turn. That is the low pivot area. And then the next day, like today, it closes up over the T line. So where would you not like this chart? Well, two places, I think. Two places would be one, a close below the T line, or two, if it broke down below that low. You wouldn't like the chart. You like the chart because it made that pivot and it had follow through. So I think two choices for a stop. Uh, Something below the T line or these lows right here. WLT. WLT is setting up as one of our rounded bottom breakouts. There's not too many rounded bottom breakouts that I don't love. I love the rounded bottom breakout. It's just a great chart. It's simply a chart that gives you a trend that breaks through a whole lot of resistance. And in this case, it's pulling back on top of resistance, which now becomes support. So that chart right there, I have to have it on my watch list. I just simply have to. I have no problem buying it, knowing my stop is going to be somewhere in the 255 area, maybe. I hope that helped, Charles. You probably know that I wasn't going to say anything different what I just said. I could repeat that statement every time on rounded bottom breakouts. Sun, bull kicker gap up. Love this chart. Nice chart. I would trade this all day long, even on any kind of pullback. And I'd probably allow it to come back to the 1860 area. 1860. Yeah, I'd allow that. And so any pullback here, nice chart. In fact, I'm going to come over here and make sure that's on my watch list. SUME. Thank you for that one. Let's take a look. Why would I be long this chart? Not just because of the bull kicker, but we have a low, high, higher low, higher high here. In fact, let's just go look at this chart right here. Let's get those moving averages out of the picture. That confusing stuff. So let's draw some lines on this, and let's just use what we have. So we're going to take from this low to this low, and let's just extend it. And let's go ahead and just create a parallel, see how close we come. And now what I'm going to do is I'm going to take these highs right there, and this high, and see if I can lay that line, how close it comes to it. Whoa, look at that. So what do we know about trends? What do we know about trends? Uh, we know bullish trends, and when I say we know, um, I will guarantee you this, okay? That bullish trends do this right here. Now, I want to stop for a second. Is there a guarantee tomorrow that we do this? Because it should. We're up against that trend line. It should. Does it have to? No. Can it move higher and then move back? Of course. Does it have to come all the way back to these lows here? No. Can it turn around and just do this? Yeah, it can. But that's something we know about trends, not just this trend or that trend. We know this about all trends. There is no exception to this rule. This is what charts do. So I look at this chart, and let's get rid of all those black lines. What potential do we have here? Well, we have a potential of this thing moving up. I think we can see that we have a top over here. So I see the potential of this moving up here. You know, if it does something like this, well, I guess I lose because I'm not going to be in it if it does something like this. On the other hand, if it was to do something like this, what are the chances of maybe all of us trading that? I think very good. And moving up like this, maybe a little pullback and then up like that. I think that would be an excellent trade. That's how I would plan this trade out. So right now, that's my plan. Now my job is to find an entry is what I'd be looking at. Nice chart. Thanks again for that. AZPN. And let's see if let's see AZPN belt hold. I love belt hold. Belt holds are my absolute favorite single candlestick. I think it's stronger than a bull kicker. Belt hold, nice consolidation at the top end of that belt hold. I'll be a buyer all day long, maybe today even, but certainly on any kind of strength that holds over those moving averages. I would actually drop it down maybe, say over 37.04ish. C, CCC. C is a great little J hook in the making. This is a terrific chart that's been in a T-line run, has pulled back to the T-line, and now it looks like it might be doing a little J hook off the T-line. I want to look at the weekly chart real quick. Look at that trend. Very nice trend. Excellent comeback here. I'd be long all day. I think it's pretty clear. A stop would probably be in that 37.70-ish area. These lows right in here. A-ray. Nice bullish engulf here. Moving average squeeze. I'm like dying to get it on my watch list here. ARAY. Thank you very much. Nice little bullish engulf, moving average squeeze. This is what I mean by engulfing the moving averages. That's impressive to me. That's very impressive. Nice chart. I'd be trading this pretty much all the way down to the 20. It doesn't have to hold the 50, but I would like it to hold the 20. And not so much a bell toll because I don't think it came down low enough, but definitely a bullish engulf. EXAS. Try that again. EXAS. There we go. Looking to buy, make sure I have the right one. EXAS. Looking to buy, it is being squeezed by the 2.8 and 17 above the 50. Yeah, I would continue to look to buy. I probably wouldn't buy until we had some sort of a buy candle. Uh, Looking a little toppy right here. Now, overall, the trend is up, no doubt about it. But I think I would want to see some bulls really step in. And then one thing I want to ask of this chart is, what do you see as a target? and make sure that, I mean, when you think about it, let's just assume you get a buy at 21.80, the 50, and it moves up to above the 20. So we're looking at 9%, which is not shabby. But if you're looking for a target, say, um, 34, 36, 38, maybe higher, we're talking 47%. So in the really big picture, how important is it to work your fingers to a nub to get in down here rather than wait for maybe a nice bullish signal that really starts setting this up to run higher? Just something to think about. BKW, bullish J hook off the 20 up through the T line. I would have to say right now, target near 33.40, then maybe 34. The big money will be made after that 34.10. That's where the big money is made. This is a fight for the entry. Burger King. Sounds good. Mac. Can we tell if it's likely continuing a trend or possibly tapering off? I'm curious as a general lesson. Um, if it can hold above the 20 here, I would say that it's continuing. But something I want to do is clean all this off. You know what? Let's just look at what we call a naked chart. There we go. So as long, and you see I've looked at it before, that line's already there. So as long as those lows hold, and let's go ahead and put an upper line here. So what do charts do? It'll keep doing that until it no longer does that. And I don't necessarily see a top up here. We've got a high and a higher high. We've got a low and a higher low. So far, everything continues to work. So right now, I would say MAC is still in a bullish trend. This top will be important to take out, though. You want to watch that top right there. Okay, where's my stop on Kate? Where's your stop on Kate? I can't tell you my stop on Kate because that's got nothing to do with your trading. Charles? My stop's about 27.74. I like it because it moved up over the 50, so where wouldn't I like it? Back below the 50. I'm going to give it room to work. Google. A short candidate? Yes, it is. Would you even look at a short play in this bullish market? Fred, in all bullish markets, there will be short charts, and in all short markets, there will be bullish charts. Always. I would follow the chart pattern is what I would do. And if the chart pattern is still working for a short, I would stay with that short. Now, with that said, I would ask you, why would you want to do that? And then I'll just leave it at that. There's no doubt about it. It's easier to fish. It's easier to swim with the current. Let's see, with the J hook, do you wait until price takes out the prior swing high? Nope. Or do you jump in early as seeing some confirmation? Yep. A price starting to head back up? Yep. I call those PBO situations. Let's take Kate. Okay. So first of all, let's talk about a J hook here. A true J hook is not really until it breaks out. So here's our J. Whoops, that's the wrong tool. Here's our J. There's the breakout. See, that's the J. So right here, That's not a J. So we really don't have a J hook here. But what this is what I would call a PBO J hook. So it's a pullback opportunity for a J hook breakout. So yes, I would absolutely buy on this pullback. By the way, you know what all a J hook is simply a 1, 2, 3 chart pattern. Uh, People call it sometimes an ABC or maybe a wave 1, wave 2, wave 3. That's all a J hook is. In a nutshell, here's a J hook. It can happen one candle or multiple candles, and then it pulls back. It can be over several days or even a week or just a couple of days. There it is. All a J hook is a continuation pattern. And I think if that's the way you look at it as a continuation pattern, it might make some sense. Let's take Kate here. What I'm going to do is let's go to our we call this our naked chart because there's nothing on it but candlesticks. So let's draw some lines. If it's a continuation pattern, what's it continuating to? Well, let's see. We're going to create a parallel. I'm going to do something like that right there. All I'm doing is connecting lows and connecting highs. That's all I've done. We've bull kicked up, I guess. We've pulled back, holding to this low so far, but certainly not guaranteed. We're trying to put a bottom in here. So what would we expect this to do? If we've got our trend lines there, so what do we expect? This is how we expect it to act. Doesn't mean that this is the buy or that's the sell or that's the buy. That's just how we expect it to act. So if that's a continuation, which a J hook is nothing more than a continuation pattern, that's how I expect it to continue right there. And I mean, I didn't make that up. All I did was connect some lows and connect some highs, and now we have a map. Is what we have here, and the key now is to get proper entries. And welcome to trading. That's not. It's easy, but it's hard. Kind of a. It is, but it isn't. You have to work at it sometimes, and you have to be patient. Let me see here. CIT. Oh, hey, we need to. Could someone draw me a line down there? Need to call it a night. CIT is a bullish trade. That's a trade I would think is going to move up into the 52, 53, maybe 55 area. Um, and you know, our job would be to find an entry in it. So that's what I would look for. CIT is a nice chart. What would be a sell target of Nugget? I would probably use that 50-day simple moving average. Now, you know, I don't know what kind of trader you are there. I don't know what you're looking for. So, you know, there's nothing that says Nugget can't run all the way to the 200 or run to 80 for that matter. I'm somewhat of a short-term trader, swing trader, and I'm thinking from here up to the 50 is 52%. So I'm thinking to myself, why would I want more? Now I know somebody's thinking, what did he just say? Of course we want more. But it reminds me of a time, you guys have heard this story so many times, not even funny. Had a person one time that I'm working with, they've never made over couple $100 on any given trade. They call me up one day and they say, Rick, I'm up $1,800. What do I want to do? Well, I'll tell you what I wanted to do. I wanted to reach through that phone and push their sell button so they could take $1,800 home. So, can it move higher? Absolutely. Is it going to run into a little resistance right here? Yes, it is. Are you looking at 50, 60% profit? I'm thinking be a profit trader. That's what hit and run candlestick people are. We're profit traders. So I would certainly take that profit up at this level if it makes it up there, which it's looking pretty good right now. Looking real good. Remember, what do charts do? What do charts do? They always do this. Always. Always. You can always buy it back because it will pull back. What if you sell it at the 50 and it continues up another 5%? So you gave 5% up. You made 50%. Excellent trade up toward that 50. Thank you. Calm. Saw calm on the scanner several times today. It's trying to make a little cradle right here. Well, I think what's most important here is trying to make a nice little bottom. Up over the 20 is what I would be looking at on calm. Of course, aggressive traders might be in already. You can see that how that cradle is starting to produce. Let me draw that out for those that don't know what a cradle pattern is. We're down, and let's change this to, let's use yellow. So we've got a yellow cradle or the mattress in there, and then we'll change that to green. We've got a headboard, footboard headboard. I think we still need a little bit more bullishness up over the 20, and that'll set that cradle up sweet. Hey, Don, thank you very much. How about GILD long? Try that again. GILD long. There we go. Yeah, GILD, this is setting up as a Morningstar pattern. Morningstar pattern is a favorite of mine. There's no doubt about it. And any kind of bullish trading over this 103.93 area here, I would look as bullish. But at the end of the day, and I don't mean that literally at the end of the day, at the end of the day, you really need to get it over the 20-day simple moving average. This is one of these charts where I think I would ask, what do you see as a target? Where's your target on this? And for fun, let's just take these tops and connect them right here. And let's just connect these lows right here. Pretty close. So, we might be looking at a target up here. If you bought it or waited to a little more confirmation. So let's tell you what, we'll go 106. You're going to give up 2.74%. I don't think that's a game changer. So I think what I would do is probably be a little cautious, a little patient. Let's see that bullishness really step in. See if those bulls are really going to do it. Give us the warm and fuzzies up over the 50. Maybe wait till over the 20, and then trade up here for about 8.5%, 9%, and it could end up running something like this, 14%. So you're going to give up 2.5%, 3% for a little bit more of a safety trade. Morningstar signal with follow through. I think that would be a nice trade on that one right there. Okay, is that like a cup of Rob? I apologize. By the time I get down to you, I really don't know what chart you're looking at for a cup and handle. I apologize. Alrighty, thanks for drawing the line down there, everybody. I appreciate it. I want to thank everybody for being here. I'll do my absolute very best to get the recording done tomorrow and post it on the website. If everything goes well, should be about noon tomorrow. If not, it'll probably be tomorrow evening sometime, but we'll get it done. Alrighty, thanks again. Have a great night. We'll see everybody tomorrow morning. Take care.